The global farmed Atlantic salmon market is shifting gears in 2026 after a strong production rebound in 2025. Early year price softness is now giving way to a more balanced and increasingly constrained market as supply growth slows and global demand continues to strengthen. Production expanded significantly last year, with global output reaching approximately 2.29 million tons through the first 9 months of 2025, up 13% year-on-year, led by Norway at roughly 1.24 million tons, up 18%, and Chile at 573,500 tons, up 10.4%, pushing total supply close to 3 million tons and creating a temporary oversupply that weighed on prices entering 2026. That pressure was evident in early January, when salmon prices dropped nearly 9% from late 2025 highs as post-holiday demand softened and supply normalized. Whole fish bore the brunt of the decline, while fillet markets held relatively steady, supported by consistent retail and food service demand. Now, that supply-driven softness is beginning to fade. Growth in 2026 is expected to slow to low single digits as biological constraints and regulatory limits cap expansion, with Norway facing continued sea lice pressure and biomass restrictions, while Canada remains structurally constrained, resulting in a market no longer expanding meaningfully and a tightening supply outlook as the year progresses. At the same time, demand is shifting and strengthening. China has emerged as the dominant force in global salmon trade, with imports rising more than 46% year-on-year to over 100,000 tons, while demand across Asia-Pacific for fresh, whole fish and fillets continues to grow on food service recovery and strong retail consumption, increasingly redirecting supply away from Western markets and establishing a higher global price floor. Trade policy is reinforcing this shift. U.S. tariffs, 15% on Norwegian salmon and 10% on Chilean product, are reshaping trade and reducing supplier competitiveness, prompting exporters to diversify into Asia and other growth regions and accelerating the rebalancing of global supply. However, while exporters want to pivot to Asia, they are also facing high air freight costs. Buyers are becoming more tactical amid cost volatility and trade uncertainty, while the market transitions from excess supply toward normalization, with tighter production and strong demand expected to support firmer pricing into mid-2026. Our recommendation is to take advantage of current pricing where possible and secure coverage ahead of expected tightening, as early 2026 softness reflects a temporary imbalance, and the market is trending toward increased volatility and upward price pressure. If you're not already, be sure to subscribe to our 3-Minute Market Insight to stay tuned for further updates. Thank you for joining me for the Tradex Foods 3-Minute Market Insight. This has been Mariana, reminding you to buy smart and eat more seafood.